Good evening, traders. Welcome to 7MinuteMarket.com, utilizing technical analysis to predict direction based on human emotion. Today is May 16th, 2012. This analysis is for entertainment purposes only. I do not and or will not make any recommendations to buy or sell anything. This is simply my opinion. Let's get started. We have a lot to talk about. This is a chart of the SPY, which is the ETF that follows the S&P 500. Right now, we had this down move, which broken down and confirmed from this bottom trend line here. We've retested or back tested this trend line, which is normal and healthy, and then it came back down again numerous times to find support right at gap window, to find support again right at this pivot point, and now we have support once again at gap fill. All right, so I was in the boat. I was telling you guys earlier that I don't think that the SPY would actually come all the way down to test this mathematical calculated level here. We would need to see a little bit of a retrace first or a pullback of some sort before we head down lower. Now, you know, the markets are in a critical state and it is very weak right now, so there is a possibility we get there. However, I still think that we need to get that bounce sooner or later, and I think that that bounce may come as early as tomorrow, and let me explain to you why. First off, we are at this gap window here. I'm sorry, a gap fill. We're definitely in an oversold condition right now, and we're at the Fibonacci 382 level. I mean, this is a lot of support right around this level here. I'm expecting a bounce sometime tomorrow, or maybe on Friday. I don't think the bounce is going to be very big. Maybe a day or two, because this is a counter trend trade based on a very weak market. I mean, going long on a counter trend is a very high risk. I mean, the odds are still in your favor by looking at technical analysis, but still the fact remains that we're in a downtrend, and the trend is your friend, and if you go against the trend, then you really want to get in and get out as soon as possible. Okay, so that's the SPY. Let me explain to you the dollar. Now here's a chart of the dollar here, and what we've done, we've come up, and we've actually broken through this resistance points, like resistance line, like it wasn't even there. Okay, and then we had this other resistance line here that we're kind of trading right around. We're kind of just like we came up, and then looks like we're going to consolidate a little bit before pushing higher to retest this top pivot point over here. Now this pivot point over here, in my opinion, is a pretty powerful resistance point here. If it can get past that, then we're going to go straight up here, and it really depends on what kind of news comes out of Europe. I mean, if they definitely say that they're going to pull out of the euro, then we're definitely going to see the dollar spike up. In the previous video, as I said, that we do have this mathematically calculated level up here. I do not think that the dollar is going to go all the way up there. It's going to need to pull back first to stay healthy to get all the way up there. However, if it does go straight up there, then I'm definitely going to probably take a short on the dollar, because I would be just outrageously overextended. Right now, the dollar is obviously overbought, so it is due for a retrace, a pullback. However, the question is when. I think the pullback is probably going to come either tomorrow or early on Friday, based on what I'm seeing here on the dollar itself. And again, the pullback, I don't expect it to be very big. So you get in, get out, and then you're done. Now let's take a look at the chart of the VIX. We broke out of this upper trend line here. We back tested at least 50%, retraced back to this trend line here, and then now we've broken back up, and it looks like we may possibly be consolidating for another push higher, at least into the 200 moving average. Now here's the thing about the VIX. The VIX looks somewhat of a consolidation pattern. However, I don't like the fact that it's it kind of just doesn't look like that. Normally, what I'd like to see is a little bit of a retrace this way, or at least a straight across, which is kind of what it's doing now. If tomorrow we get another down candle, that'll validate that we are consolidating, waiting for a higher push up. However, if we do get a down candle tomorrow and the dollar continues lower, if the dollar pulls back, then we should get that bounce we're looking for in the markets, and that should push all your your stocks up, just for at least just for a small period of time before the markets come crashing down once again. Now here's a chart of the Emini futures, which is actually trading right now up 750s, which is not bad. However, like I said in the previous videos, it really doesn't matter on the E-mini futures until Europe comes out and does the markets open and does their thing. I mean, right now the Europe market isn't open, so looking at the E-mini futures as of now, it looks pretty good, but it doesn't mean it's going to last like that tomorrow. But it does look like we have broken down here. from here to here. We did consolidate, and then now we're breaking down again, and there's a possibility we consolidate again before we hit this mathematically calculated level here. Okay, so that's the mini futures. All right, the next thing we want to look at is the GOD. In the previous video, if you just watched the last couple of videos, or maybe 2 or 3 or 4 videos in the past, I had this mathematically calculated level here. We're at the Fibonacci 50% level. We have this pivot point line there. I'm sorry, right here, and it looks like I mean, amazingly, I don't know how these mathematical calculations work, to be honest. I just input the data and it spits out what it spits out. Basically, right now, the mathematical calculation held its own today. It was a fun day to watch, because if we kind of look at the 10-minute chart here. Alright, it looks like the my charting software isn't going to pull up the GOD on the 10-minute chart right now. They must be having technical difficulties. But let's just take a quick look over here. I mean, if you can see, this mathematically calculated level here held pretty well. GOD came down, pierced right through it, and then closed right on it, right above it. Just like right on it. And if you look at the intraday actually showed the GOD coming down, bouncing off this line, and then sooner or later came down, came back up, and then closed right above this line right here. The reason why I like the GOD right now is that we have higher volume right here, which is higher than the past 3 days, and I like that. We're definitely in oversold conditions. Not that oversold, but we are in an oversold condition. We are running away from this 20 moving average, which is definitely an extended position right now. And we have this doji candle, which indicates a possible reversal. I don't want to say a reversal, but it's a single candle pattern that indicates a indecision, and that sometimes reverses on gold. Okay. So obviously all the signals are there, and the odds are definitely now in your favor. If you had taken this trade, I took this trade at 49.12, which was where my my calculated level was. You know, I'm not expecting a big bounce off of this. I'll probably get out as soon as it gets to this level here, if possible. My stop, however, is any close below this green line here, and a confirmation, just like I indicated in the other videos. So you can see, as you can see, my risk reward is definitely good. I mean, you got this green line. If it closes below this green line, you know, it's not that much farther down. But my reward is all the way up here. You know, I mean, to be honest, the markets are weak, so I may actually take a, you know, get out of GOD right there if it was to go up tomorrow. I'm not sure if it's going to go up tomorrow. The markets are very weak. It really depends on what happens in Europe. But all the signals are telling me that the odds are in my favor, that we're going to get a bounce in the GOD. So we'll see tomorrow what happens. And this is a chart of the gold futures. Right now we had this double bottom. I think I mentioned this in a previous video. We came down, we retested this bottom. We had nice volume on this somewhat of a doji candle here, and then now we're bouncing off this double bottom pattern here. So as long as you know, there's nothing crazy in Europe happening tomorrow, we should, well, hopefully we see a bounce in gold tomorrow, as well as a bounce in the markets itself. Okay. So we'll basically see what happens tomorrow, and thank you very much for watching, and I'll see you in the next video.